So yeah, I'm Nick, founder of WeFunder. We're a crowd investing platform that lets anybody invest around the world as low as $100 in startups, mostly in San Francisco. We funded about 110 companies in the last year. It's about $13 million. And our biggest win so far is Zenefits. Our investors invested at $10 million, and 2 years later, it's about $4.5 billion. So one guy who basically invested $5,000 has made $3 million, and that's what we do.
Yeah. Do you understand what he does? Does he have traction? Yeah.
Cool. All right. So I figure I'll start with like my life in 1 minute, so you can kind of get a sense of my experience and what I want to try to get across today. So first, about over 10 years ago, I went to get an MBA. Spent 2 years studying business, and then got out in the real world and spent 5 years starting a company that basically failed. And I realized everything I learned in my MBA was actually kind of like useless, counterproductive. After that, I call this my year in the wilderness period, where I basically built about 12 different iPhone and Android and web applications in the course of about 18 months, basically failing very, very fast. The last one I made did relatively well. We got into Y Combinator, and that is WeFunder today. So I'm going to talk about a few things, a few lessons I learned along the way that I think are useful, and then I'll conclude with some fundraising tips. If anybody has any questions at all, just like raise your hand and interrupt me. I actually really hate giving lectures, so I don't mind this being a little more interactive. All right, so first lesson. Even an MBA can code. So I built my first company for 5 years, and I was basically making mobile games back in 2004, which is like really, really early, like way too early. And I toiled away for about 4 years. Eventually, the iPhone came out. And I was kind of known as a pioneer in the mobile space. So Apple and Steve Jobs actually asked me to finish this application I was working on. And if I did so, then I could present on stage with Steve Jobs for the iPhone launch. So kind of a big deal. The only problem was I had these beautiful mock-ups, but I couldn't actually code. My technical co-founder had quit like a year before. I was interviewing people and trying to hire consultants. And long story short, I didn't get it done. I couldn't actually make just a simple iPhone app. And so I missed out on being on stage with Steve Jobs for the iPhone launch, which is really, really pissed me off. And so I just spent 2 months, basically, and taught myself how to code. iPhone app, Objective-C, on Rails to the web, and I did it. Too late for Steve Jobs, though. So I strongly believe that every founder, everybody, should at least know how to code. And I don't mean be like a real software engineer where you're going to work on hardcore problems, but be able to prototype something out and actually show that can be, be a working thing. So does anybody here disagree with me? How many people actually think coding is useful? All right, so great, most, about half. So I think if you're really driven, it doesn't take that long to learn. I mean, I'm not that smart, and I figured it out in about 2 months because I really, really wanted it. No one's going to care as much as you. No one can move as fast as you. It's easy to you can show them something. Second lesson is kind of common sense. It takes time to get good at something. And for your first product and your first company, it's probably going to be bad. And there's plenty of mentors who will give you plenty of good advice about lean startups and some methodologies for actually getting customer feedback and iterating more quickly. And that's all great. But I look at it on a slightly different perspective. I partly look at it as how can you be better? My first company failed because I wasn't good enough. After that, it was how do I actually get good? And the answer is not. I don't like playing videos, but this video is by Ira Glass, who I really, really respect. Watch it for 1 minute.
It's trying to be good. It has ambition to be good, but it's not quite that good. but your taste. Nobody tells people who are beginners, and I really wish somebody had told this to me, is that all of us who do creative work, like, we get into it, and we get into it because we have good taste. But it's like there's a gap that for the first couple of years that you're making stuff, what you're making isn't so good, okay? It's not that great. It's trying to be good. It has ambition to be good, but it's not quite that good. But your taste, the thing that got you into the game, your taste is still killer. And your taste is good enough that you can tell that what you're making is kind of a disappointment to you. You know what I mean? A lot of people never get past that phase. A lot of people at that point, they quit. And the thing I would just like say to you with all my heart is that most everybody I know who does interesting creative work, they went through a phase of years where they had really good taste. They could tell what they were making wasn't as good as they wanted it to be. They knew it felt short. It didn't have this special thing that we wanted it to have. And the thing I would say to you is everybody goes through that. And for you to go through it, if you're going through it right now, if you're just getting out of that phase, you got to know it's totally normal. And the most important possible thing you could do is do a lot of work. Do a huge volume of work. Put yourself on a deadline so that every week or every month you know you're going to finish one story. Because it's only by actually going through a volume of work that you're actually going to catch up and close that gap. And the work you're making will be as good as your ambitions.
I love this video because this kind of described my journey over the course of the next couple of years. So after that whole Steve Jobs fiasco, I realized I need to be a lot better. I need to get more skills, more talent. And so during this period, I basically created 12 different, fully functional applications in basically a year and a half. I eventually got a little bit better. You just create lots of stuff, iterate it. If it doesn't work, get rid of it. And I don't mean quit. Sometimes it's good just to attack things in a different direction. I'm usually wary of falling too much into an incremental thing where your users just don't love you, and so you focus on all these 5%, all these little 5% gains. But when you create something that people actually like, you can really feel it. And that's where the kind of the point we need to get to is to really, really understand your users at a really fundamental level. And the biggest lesson I learned in this time period was focus and simplicity. And this is obvious, everybody knows this, but it's one thing to actually intellectually understand focus, and another thing to actually do it. And it's something that I still struggle with to this day. And so, for instance, one of the biggest flaws that I had early on in my career was I always tried to design something kind of a year in advance, like how I envisioned this thing should work in a year, and which is very dangerous, especially for social apps or marketplaces. It just doesn't work. Whatever you create has to be instantly usable by the very first person who sees it. And so it's good to have a plan for how you want to conquer the world in the next 5, 10 years. You have to have that, but you need to start trivially small, so small that people might even laugh at it. When I first heard of Uber, I thought it was ludicrous. It was a way for rich people to spend $100 to go 3 miles. But obviously, it became a lot more than that. Or Facebook was really just about helping a bunch of college students get laid, and that was the kernel for what it is now. And so one rule I like using is that any idea you have should go from idea to launch in 6 weeks at the most. And if you can't do that, it's probably a good sign that it's just too complicated. All right, so I'll conclude with some fundraising tips, since I was asked to talk about that. So this is an oversimplification. I basically classify investor behaviors in 2 different ways. One, they either act like monkeys or sheep. Now, our goal is to build our company so that we have leverage, that we're profitable, that we have insane growing metrics. And if you do this, fundraising is just really, really easy. Investors will fight over you, and the hardest thing you have to do is decide whose money you want to take. Now, usually startups are hard. It's kind of hard to get in that position. So in that case, you have to be a really good sheepdog. So these are tips for being a good sheepdog. So first, your fundraising, when you start it, should end in 2 weeks at the most. And the way to do that is to prepare. You shouldn't start fundraising until you know you can succeed. First, you need to get traction just by sheer force of will. There has to be something in your business that you can grow that's important, and that by focusing on it nonstop every hour of the day for 3 or 4 or 5 months, you can grow it. And until you do that, you're going to have a very, very hard time fundraising. Then, of course, there's the standard advice that if you want money, then you should like ask for advice. And that's true, but you should like do it authentically. Like ask advice of people you respect 6 months before you even want to start fundraising. They can build a relationship, they can see you progress. This makes things a lot easier later. And finally, it's also nice to prepare some surprises when your fundraising starts. For instance, I had a friend who decided to delay fundraising until a week before he would hear back on whether or not he's going to get a grant. And so when he started fundraising, a few days later, he got to tell all of his investors that he was talking to that he's got $1 million of free money from the government. And that obviously helped a lot. When you are fundraising, it has to be your complete and entire focus. That's like all you can do. That's also why your fundraising has to be really short, in 2 weeks or less, because you can't like work on product, you can't talk to users, you can't recruit, surely you can't find office space. All you should be doing is taking 100 meetings in 2 weeks and get it done. And with that, it's like you meet everybody at the same time. You don't meet people in parallel, like one after the other. Just meet everybody at once. You might want to prioritize the people, of course, who know you already. I like prioritizing independent thinkers. Some investors like making decisions based on how they like your business, and other investors, even though they won't admit it, just basically invest with the herd. They will invest because everybody else is investing. And it's good to figure out who you're talking to and save the people who invest with the herd towards the end. And every time you get a check, like, first of all, close immediately. If someone seems interested in investing, like, get the check right then. And then when you get the check, tell everybody you talk to that, hey, I got more money. And your goal is to basically manufacture a deadline. Now, if you really think about things from the perspective of an investor, the longer they wait, the less risk there is. In the ideal world, they can wait until there is no risk and then give you money, and that's great for them. And your goal is to basically make the fear of missing out override their fear of actually acting. And so, like, the fear of missing out is like kind of what drives successful fundraising. Your goal is to convince them that you're the next Uber or Facebook or whatever big unicorn you want to pick, and that they're going to feel like kind of like a little stupid if they don't invest in you. We never say that, but the feeling they should be left with is like they got to explain to their colleagues and their limited partners why they turned you down. Unless, of course, they just write you a check right now. So that's all I got. Any questions? Yes. Uh-huh. Yeah, I mean, it's hard to give like generic advice because everything's so specialized and specific. In general, I usually pick a valuation I want to raise at that I think I deserve. And if someone wants to give me half of that and I like them, that I'm just going to use as a tool to herd all the rest of the cats very, very quickly. So that's great. It might be that they perhaps want to give me a bunch of money at a valuation I think is not good enough. In that case, it's a hard decision, and only you can answer that based on like how optimistic you are.
More money. So, for example, you get some checks, but the term of you don't accept the term. For example, they ask for 25 equity or something like that, more than what you want. What you have to do?
Yeah, I mean, the part of my problem up here giving like generic advice is that most of my experience is in Silicon Valley, and most of the companies that I work with like just raise on standard terms with a convertible note or a safe that is just accepted you do things that way. I mean, it's easy for me to say, but if someone gives an absurd offer or doesn't seem to understand your business, like why work with them? If you take someone's money, you're kind of stuck with them. So you definitely want to take only money from people who actually seem to be reasonable and understand what the market price is. Otherwise, it's probably not worth doing. But of course, it's easy to say if you're not about to die. So there's always exceptions.
Yeah, I think the main difference, I mean, I call this like you live in a different planet sort of thing. Like you're in the seller's market. There are too much money, too few good entrepreneurs. In this part, there are a lot of good entrepreneurs, so it's a buyer's market. The investors kind of dictate a lot more non-standard terms. So it becomes a trick when you have only 2 investors and you get 1 term sheet. Okay, I don't want to give this, but it's this or nothing. So it becomes really tricky, but the fundamentals apply. If you think, and especially, they will be here with you for a long time. If you don't like them now, you're not going to like them later. And that will create a tension. It will not be the best thing in your life. You want to leave what you're trying to build if you're not happy. That's very difficult.
One thing I took out of my presentation, because it was a little too long, was that I like being very authentic when I'm fundraising, to the point of actually proactively bringing up the problems with my business. And that isn't conventional wisdom. A lot of founders I know are very, very good at manipulating people and manipulating investors to give them money, and they're very successful at it. But I like the investors who I don't scare away, who give me money anyway, because I'm stuck with them for a long, long time, and I want them to understand what they're doing.
And you don't want this to be the last thing in your life. You want to go back to them, and you want to work with them for the next big thing.
Exactly.
Super nice. So give me a run, give me a help. Appreciate Nick. Thanks so much.